All right. Well, let's just jump right in. So,
Sounds like a plan.
first of all, thanks for coming on. I know you're a busy guy, and I know you're doing the rounds on the podcast these days. And I just finished your book today, actually, because as you know, I ordered it off Amazon, took forever to get there, and I ended up missing it due to travel. And I got the Kindle version. Just finished it, and as is the case, whenever I read a Bitcoin book, even though I didn't think it was possible, I get more excited about what's going on. So, maybe just to start, why don't you just introduce yourself a tiny little bit, and then we'll get rolling on the pod.
Yeah, of course. Sounds great. So first of all, thanks for buying both the paperback and the Kindle version. I sold you 2 books, which is awesome.
It worked
and
out. It worked out because my just a side note, my old man, I've been planting seeds for the last several years, and this year there was some kind of watershed moment. So he read the Bitcoin Standard, he read the Internet of Money, he read the Little Bitcoin book. He's currently reading Hazlitt's Economics in One Lesson, and he's bringing up the hard copy of your book because he's coming up near where I am tomorrow, and he's bringing that for the plane. So it's not going to waste.
I love it, man. That's a lot of good material you got on his plate. So great job educating him, and no doubt just listening to your pod has gotten him pretty far up the curve. I just want to say yours is one of my favorites. I think I only discovered you in maybe like November, but I'm definitely a loyal listener, and I love the format. So
thanks, man.
Yeah. So okay. So real quick on me, a quick disclaimer, of course, none of this is investment advice, and anything I say is my own opinion, not the opinion of my employer, WESCAP Group. Real quick background on me. Grew up in LA, went to college in Massachusetts, went to work on Wall Street, worked for Goldman Sachs for a couple of years before the financial crisis. So I was born and raised on the dark side, and then when I left the bank, I did private equity for a little while, and then I worked at a hedge fund for about 5.5 years. I joined as an associate, and I was a principal when I left. And then I joined the family business, which is wealth management. That was 7.5 years ago. I joined my firm, which is called WESCAP Group, which was founded by my father and his co-founding partner. And so I've been doing that since then. So that's the very quick background. And by the way, I live in LA, so I started here. I'm back here. I got 2 kids, so I'm a family man. And that's the quick story, which doesn't tell you about Bitcoin, but I'm sure we'll get to that.
Yeah, we'll get to it. Good job. That was a great synopsis. So I've heard you've been, like I said, you've been making the rounds on podcasts, which is awesome. And I've listened to the one on Brady's show, Bitcoin Echo Chamber. Were you on Kayvon's show?
So I was on Colin's show, which is Bitcoin Echo Chamber.
Right.
Then I did Brady's show, which is Citizen Bitcoin.
Mm-hmm.
And then most recently, I did Daniel Prince's show.
Oh, that's right.
Which is called Once Bitten.
Yeah. And I listened to those as well. And, clearly, they've all been great, really enjoyed them. Clearly, by virtue of the fact that you've written a book on the subject, you're extremely knowledgeable, and you have the context of your career leading up to it. So that's extremely valuable. One of the things I want to know is, what's it like, you've been in wealth management, you've been in the finance space for the last, 10, 15 plus years.
Yep.
What's it like now for you being an author? How has that kind of changed your day-to-day, your perception of yourself, your perception of your career trajectory? And what's it like, doing all these rounds, getting involved in this Bitcoin world that, perhaps before you were aware of, but now you're having those conversations, you're meeting all these people. What's that whole experience been like so far?
Yeah, well, look, it's been awesome. I'll say that I'm still sort of outside consensus as it relates to, most of the investment world, right? Mm-hmm. So I think that'll change with time, but especially in wealth management, I think it was Bitwise did a survey of registered investment advisors, or maybe it was wealth managers, I don't know, a few months ago, and asked them about intent to purchase Bitcoin. And it was under 10%, right? It was something like, what are you going to buy Bitcoin this year or in the next few years or something? And it was less than 10% that said that. So, or maybe it was crypto. So yeah, so outside consensus. So that's been interesting. The community's been really welcoming. I sort of got down the rabbit hole in 2017. So I've been in it a few years. I was, basically a lurker and a wallflower. Although I was going to conferences and stuff. I went through my altcoiner phase,
Right.
and then my conviction hardened on Bitcoin. A little over a year ago when I wrote the book. But yeah, it's been fun being outside consensus. It's been fun, being welcomed into the community. Got a lot of great feedback. Career-wise, I'll tell you this, man. This is not there's not going to be a financial return on investment on this book, right? Because so first of all, my out-of-pocket cash cost on the book is 5 figures. Okay, I spent about $7,000 alone on editing, and I'm really glad I did because I got one of the best editors in the business. Her name's Beth Rashbaum. She edited one of Stephen Hawking's books. She edited a book called The Snowball by Al Schroeder, which is probably the definitive biography of Warren Buffett. And then I spent, money on artwork and, the label for the logo, I should say, for the label. And, you got to get filings, for the ISBN number and, proofreading and formatting and all this stuff. So I'm gonna have to sell a lot of books just to make my cash, outlay back, let alone, the hundreds of hours, spent writing, et cetera. So this is a passion project. I do think it's going to be really important to the investment world, over the next several decades and in the long term. But I did it because I felt that I needed to get my story out and my view out. And I also, of course, needed to educate my clients. And that was sort of the proximate catalyst for the book. Was it got to be January of last year, and Bitcoin was, in the 3,000s. And I was like, all right, it's time to get into this thing, but I'm gonna have to explain it to my clients. And, they're not, one-off conversations are not going to be enough, because they're going to be telling me, well, it was at 19, 20K and now it's at 3K and you're a lunatic. And so I knew that I was going to have to put it in writing, and that was the genesis of the book. So hope I answered your question.
Yeah. And what was the process of writing a book like for you? Because obviously this was outside your wheelhouse for what you've done previously in your career. My feeling or my sense is that writing a book is a pretty daunting task, just organizing your thoughts, determining how you're going to lay it all out, obviously having the requisite knowledge on the subject matter and all that kind of stuff. Tell me about the process of actually writing this book.
Yeah. So I had a few ideas, and then I just started outlining. And the first sort of draft or version of the book was pretty dry. It was really technically focused on what is money, what's the state of the world in terms of debt, what is Bitcoin, what's the valuation, and what are the risks. And so that was step one. And it actually kind of flowed out of me, honestly. I mean, I probably had 100 pages in like 6 weeks. So a lot of the meat got on the bones quickly. Mm-hmm. But then I, started soliciting feedback from, friends and family and trusted, people, mostly in regular way finance. And, it's a little bit the old 80-20 rule. It's like, getting the first piece on paper is, or at least it was for me, the easy part. And then, of course, really polishing it, augmenting it, filling in the gaps, whittling down the pieces that really don't belong, and then beefing up the hard parts. That takes, a lot more time. So I will say that, as far as my, experience and talents are concerned, I consider myself a good writer. I think I'm a lot better at writing than I am at talking. I think actually that talking is my deficiency, or presenting is my deficiency. I've been trying to catch up on that front, but so the first set, I don't know. I think that the first stage of writing was the easy part, and then of course it gets harder when you're whittling down and you're editing, and you're just you're going at it, another draft and another draft and another draft, and that's the sort of less fun, tedious part. Right. The fun part for me was the original part, getting most of the meat on the bones.
How long did it take you to write it?
So I started writing it in January, and it was largely complete by probably June. And then I went through the editing process with Beth, and then I sort of took another knife to it, basically. So I spent a few months, but basically it was out in September.
Was there any trepidation, because Bitcoin is a never-ending rabbit hole, as all of us in there in this space are very well aware of, and there's always new angles, there's always new implications, there's always developments in the technology and the social phenomenon, everything. Was there ever any trepidation in writing a book, and obviously in doing so, you're putting yourself out there and implying that you are capable of doing so, capable of articulating what this whole thing is. Was there ever any trepidation in that regard?
Yeah. So definitely the piece that I had the most trepidation about was the technical section, right? And one thing that was really important to me, and this was actually a point of debate with a few people that I talked to, family and trusted advisors. I felt really strongly that I wanted to not gloss over the basic technicals, the basics of, how SHA-256 works, how ECDSA works, what is the process of mining a block, and and basically arriving at that moment of consensus. And I didn't want to leave that out because my personal experience with understanding Bitcoin was I didn't know anybody who was deep in the weeds. And so it was just kind of on the internet. And I actually hadn't really figured out, the podcasts. I hadn't even found Marty Bent or Stefan Lavera or any of those guys. And this was, I think, before your time, right? At least podcasting. So I was just going on the internet, and I had done, I don't know, probably 10 hours of research. And I got to the point where I was like, just tell me how the damn thing works, right? Tell me how literally you create security out of this random process of finding a block, which requires that you understand basically a hash function, as well as a Merkle tree and the timestamp and that good stuff, and finding the knots. So I really wanted to include that. And I wanted to talk a little bit about potential attacks on the network. So that was important to me. And so I wrote that stuff out. That was actually kind of the last piece. It wasn't the last piece I wrote, but I basically gutted it and rewrote it. And actually part of that process was I had gotten through a lot of it. And then Callie Rosenbaum published his book, Grokking Bitcoin. And I stopped. I tweeted at him about this today, by the way. I stopped writing and I just went through his book cover to cover, because I felt at that point like, I really hope I didn't miss something technically. So I'm going to, review this resource because it seems really good and he seems to know what he's doing. So that was the hardest part for me, was the technical piece, both making sure I got everything right, but also not going too long and not going too short either.
Yeah, and I don't think I mentioned this at the beginning, but I thought it was, because a book like this, I imagine it might be difficult to decide how much time to spend on what, portion and making those decisions. And I just thought, and part of the reason why I recommended it to my father and will recommend it to many more people is, it was concise enough to not get lost in the weeds. You provided the initial context, which was wonderful, but there's a lot more you could have gone, but I think you said just enough to set the stage for why Bitcoin is necessary and the value prop for Bitcoin in the times we're in today. And then you didn't get lost in the weeds in the technical section, but you gave enough to convey why this is kind of special. So I felt like it was really accessible, but not making any trade-offs in terms of leaving too much detail out. So basically accessible to a person who maybe it's the first book on Bitcoin they've read. So I don't think I mentioned that, but I want to congratulate you or praise you on having done that.
Well, I appreciate that, John. It's music to my ears because it's exactly what I was going for, right? I saw a gap besides wanting to educate my clients, because honestly, I went and looked in the market and I looked at what was available, right? And I saw a gap between, longer form basically and shorter form. And the long form, look, let's be honest. I looked at Saifedean's book and I love that book. And I cite it in my book, I think twice. And, it's the Bible, right? But then I thought about, is this the first thing I can hand to my clients? And the answer was, I don't think so. And so, yeah, I saw a gap basically in the market between, really expansive, complete, including lots of, monetary history, and then I also saw a few books which were shorter, which were great sort of intros, things you can crank through in a couple hours. I really wanted to do something which was in between that, as you say, a beginner could pick up and get through and get a lot out of, but wouldn't be so wouldn't be shorter or perfunctory, and would hopefully give enough of the pieces to let the reader say, oh, I get the story. And, no single book is going to give me the whole story, but at least there are enough pieces there that I can, go do more research and fill in the blanks as needed.
Well, exactly. I mean, you're enticing someone who's at the very beginning of the journey not to be turned back by the complexity or just the mass of information that's being thrown at them, right? I mean, we've all had these conversations where we're in a social event or it's a family member, whatever, and they ask you, why are you so interested in Bitcoin? And it's difficult to determine where to start because they're coming from places of, relative lack of information about all the different components of Bitcoin and why it's important and, why it's done what it's done over the last decade. And, you lose them pretty, like, if you're not really articulate and really dialed into where they're at, you're going to lose them within like 10, 15 minutes. You start talking about hash functions, they're going to be like, I don't know what you're talking about. So these sort of resources, and your book in particular, I mean, I look forward to when I have those conversations, just saying, why don't you have a read of this book, and then we'll grab coffee and we'll talk about it,
Yeah, no, that's exactly the goal. And that's actually what I tell people now. I'm like, look, read my book. And after that, I'm happy to talk with you.
Yeah.
And, if you can't afford the book, I'll give you a copy. Just check it out. But yeah, that'll give you the base, because you have discovered, as we all have, that, yeah, the one conversation pitch, or even the two conversation pitch, it just doesn't work. I mean, I've been trying, man. I've been trying to hone that pitch for the last few years, and others have been doing it for longer, yourself included, I'm sure. And man, it's tough.
Well, that's what I was going to ask you. I mean, I know the motivation for the book was you were coming up against this wall with your clients, but like, what were those conversations like? Because, I guess at some point you saw the value in this thing, you saw past the mainstream narrative and the FUD, and you began to get a realization and a sense for what this really represented. And naturally, in your capacity, the service you provide, you wanted to bring this opportunity to your clients. When you have that sit down, you're in the office or wherever you have your meetings, and you broach the subject. How did those conversations go down? What was their kind of response to someone who, I guess, previously only introduced them to more, standard mainstream, assets and investments? What was their response when you started broaching this subject?
Yeah, I mean, surprised and mostly negative, right? Because, the most people, it's funny, even I actually have a number of sophisticated clients, and my service actually resonates better with them, because sadly, the majority of the wealth management business is about sales. So I resonate. Yeah, exactly. I resonate with that small percentage of the population that can see through a sales pitch to the substance. And that really is the minority of people.
Mm-hmm.
But even sophisticated clients, they struggle, because it's, the mainstream media coverage is just so abysmal, right? It's so negatively focused. It's so sensationalist. It's so, focused on Mt. Gox and hacks and, I don't know, money laundering and terrorism, even though the data don't support it. It's all the negative stuff. And so, yeah, it was unfortunately mostly surprise and negativity, honestly.
And so during that period, like, did you get turned away by your clients and you thought, I've got to make a better pitch, and that's the genesis of the book? And has that changed your clients' interest in the asset?
Yeah, it's a good question. So there's two pieces in there. I don't actually remember if it was negative response to the pitch that caused me to write the book, or if I had sort of already figured that out from conversations with, like friends and family. It's a good question. I honestly don't remember. And then, yeah, with respect to, turning opinions, it's definitely been, the response has been positive. It's ranged from, wow, what an awesome book, I loved it and I'm giving it to, people I know, to, wow, I really like the book and, I'm convinced that there's a place for Bitcoin in the world, but, let's limit the exposure, to, wow, I liked your book. I don't get it at all, but it looks like you did your homework. So I trust you to, basically allocate the capital. I've still had a few negative responses. My honest suspicion is that the negative ones didn't actually read the whole book, like they didn't do their homework. And that's their right. They're paying me, to serve them. So when I, serve up this document to them and say, do some homework, a few of them inevitably are gonna balk at that. So, but overall, it's been a positive response. It's been a mixed bag, but it's been overwhelmingly positive. Yeah.
Is there any friction or awkwardness? Because Bitcoin is fundamentally, it's been called an option on the failure of the legacy financial system, right? It's a complete, it's another currency, it's another system, it's all these things that we know it is, and we're primarily interested in it, many of us, because it is the antithesis to what is currently going on in the financial and monetary, domain. So, you've previously operated solely in that domain, and you've brought clients, options, investments, assets, and stuff in that space. When you are pitching Bitcoin and you're painting this picture that it is the answer to a crumbling system, as it were, in so many words, does it change their perspective on other things that you're doing for them, or is there like a friction or awkwardness where you're saying, hey, this could all go to hell and Bitcoin's kind of the life raft? Like, what's that dynamic like?
Yeah, what's that dynamic? I don't pitch it honestly I actually don't pitch it as what you described as sort of the, the insurance policy on the current financial system, going down the toilet. I pitch it more as debt is too high and it's rising, and there's a few ways that could resolve itself, and I can, get into the framework of the sort of six potential outcomes that I talk about in the book. And with the most likely outcome being inflation, you ought to own some inflation-proof assets, some inflation-proof money. And by the way, the thesis for Bitcoin in that framework or in that light is basically the same as gold, right? It's largely the same arguments, but that's kind of the framework I use. And then of course I layer on the non-correlation, and it's the best performing asset of the decade, and it still has a lot of potential because the total addressable market is 10 to 100 times the current value. So that's kind of how I approach it, as opposed to the doomsday, this is the thing you want to own in a disaster. Because I got to be honest with you, it depends on what you consider sort of a disaster with the existing financial system. In a true societal disaster, the most important asset to own is going to be 9mm ammo, right? Let's be honest.
Right.
So it's not even going to be gold, right? It's not going to be gold. It's not going to be cash. That's going to be the
food
most,
and bullets, water,
food and bullets, man. Yeah. That's going to be those are going to be the most useful liquid things. So, yeah. So that's how I approach it.
And what's it like? You mentioned that your father founded the firm, and he's still there, right? As far as I know.
Yeah. He's still 5 days a week. He loves what he does. He could have retired years ago, but he loves two things. He loves serving clients and helping people, and he also loves the constantly changing multivariate problem, which is financial markets, which is endlessly fascinating.
Right. And I've many years ago, actually kind of currently now too, now that I think of it, but I've worked with my dad before as well. Right. And
Oh,
that's a
cool.
whole nother, kettle of fish in itself.
Yeah.
When you broached this subject with your father, what was his response initially?
Yeah. I think I'm sure he was skeptical. Um, but I had already done a decent amount of research. And so I sort of educated him and got him up the curve. But yeah, I mean, he's not one of these guys, God bless him, these computer science, distributed systems, crypto guys who read the white paper and are like, yes, this is the thing. Of course, this is going to work. That's a very small segment of the population. And he's also not, he's not a hardcore libertarian or an anarchist,
Mm-hmm.
or, a serious Austrian economist, which I wasn't either. I wish I had been. Exposed to that stuff earlier. So yeah, it took some convincing, but to his credit, he is open-minded. He reads and thinks very widely. He is very much a generalist and wide and open thinker. So yeah, he got it. I don't know if I want to say faster than I thought he would, but yeah, maybe faster than I thought he would.
Yeah.
Faster for sure than most, boomers, or people of his age, I think get it.
Yeah. My dad's 67 or something like that, 67, 68.
Yeah.
And I get such a kick out of now when I'm home, somehow the subject will come up. We'll be sitting around having a few drinks after dinner or something. And, obviously I talk about this stuff all the time. And,
Mm-hmm.
someone might ask me something about it. And now he's jumping in. He's like, I got this one, John. Let me just explain this to this noob over here. And
I love it.
he'll go down through so many, and I'll just be sitting back like, wow, that's pretty good. That's
I love it.
really good.
There's
Oh,
some
I love it too.
satisfaction in that, man.
Oh
There's
my
got to
God.
be I got 2 kids. There's satisfaction in teaching your kids things and seeing them learn and grow. And likewise, there's satisfaction in a kid teaching their parent something. That's cool too.
Yeah, 100%, 100%. Going back to the firm and stuff, just to how do you guys get your clients into Bitcoin if it's something they choose to do? Is there what kind of channels do you use?
Yeah, I mean, I'm probably not going to comment on, on specific channels or products, but I'll speak generally, which is, there's obviously GBTC, that's the Bitcoin Trust. That's sort of the only publicly traded pure play Bitcoin product you can buy in a discount brokerage account. But there are new ones coming to market. Bitwise has a Bitcoin only product. There's several limited partnership structures, which are basically hedge fund structures, but they have, decent liquidity. So that's sort of more work. It's more paperwork, but you can actually buy the asset, at net asset value, without paying a premium. Although there's, some complexities with that, and there's restrictions in terms of, you got to be accredited or qualified. You got to have a minimum net worth. So yeah, there's a few options on the market, and honestly, we're past the point, in my opinion, where a wealth manager can reasonably say, oh, there's not a reasonable product that's available, to use for my clients. I think you could have argued that a few years ago, but yeah, we're past that point.
Right. And when you were writing the book, did your bullishness, your enthusiasm, your optimism on Bitcoin harden, accelerate, expand? Like what happened there? And if the answer is yes, did it change your investment approach to it? Because I get the sense, obviously you're a professional in this industry, you're an old hand at constructing balanced portfolios and all the rest of it. Have you stayed within the confines of what you advise your clients, or are you taking a different approach personally? If you're
No,
comfortable saying, you don't have to say.
I feel the same. I feel the same way. As my clients. So I did make the usual journey between the journey of, crypto as an asset class. And yes, Bitcoin was, the first, but wow, look at all these whizzy new ones that are better. To my credit, Bitcoin was always, my largest position, likewise for clients. But yes, I became more Bitcoin maximalist before writing the book. And then as I wrote the book, my conviction was hardened further. I don't know if that's because, it forced me to literally, put things onto paper, as a lot of people say, if you really want to understand something, write about it cogently. But there was definitely an element of that. And yeah, I haven't bought anything but Bitcoin, as far as crypto or crypto assets are concerned, in, I don't know, at least a year. Yeah.
And do you have a very kind of strict approach to how you take and hold a position? Like, you're a professional at balancing portfolios. Do you have how do you construct that for yourself?
Yeah. So, for clients, we have a risk framework for clients. Okay. So we have a risk scale, which is 1 to 9, and 1 is lowest risk and 9 is highest. And that governs basically the portfolio allocation. And by and large, you're going to have more quote unquote risky assets at the 9 level than at the 1 level. So that's one piece to consider. And then as far as my, personal risk tolerance is concerned, I have a pretty high risk tolerance. So my allocation to Bitcoin is higher than my clients. I can definitely tell you that. And it's interesting though, when making the portfolio allocation for clients, it's an interesting conundrum, because the thing is uncorrelated to basically all other assets, except other cryptos. And it's arguably one of the best hedges against inflation for when that happens. And I don't know when that'll happen. It could happen soon. It could, not happen for years. So really arguably ought to be in anyone's portfolio, including the lowest risk. And when you think about the quote unquote lowest risk portfolio, what does that actually mean? Well, it means it has more bonds, right? It has more fixed income, and it especially has more quote unquote low risk government bonds. Well, if inflation turns into a significant problem, and I think, over the next decade or two, it's like almost inevitable. It's hard to say what the timing is, but it's I don't want to say a certainty, but it's high probability. Well, then your quote unquote low risk portfolio is actually going to get whacked, potentially worse than the quote unquote high risk portfolio, because at least some of those assets in the high risk portfolio, generate an economic return that is going to be somewhat insulated from inflation. So you can make arguments, on either side with respect to how much, should you put in the portfolio. We have started small. We've been very conservative. I mean, we've started clients at less than 1% allocation. And so, it's hard to make the argument that you can't afford to lose, 1% of your portfolio, right?
Sure.
That's a near impossible argument. This is something actually that stumps a lot of people. They don't understand this concept of risk in the context of a portfolio, right? There isn't really such thing as a quote uninvestable asset in terms of the risk. There's only sizing of it, right? Even if you've got a bet, if you've got an extremely risky asset where, it's 90% chance that it's going to go to zero, but the upside is, hundreds of 100x plus. Well, if you size that small enough, it probably ought to be in the portfolio, especially if you sort of circumscribe the portion of the portfolio that is those very asymmetric risky bets. So yeah, that's something that actually surprises and stumps some people, including some clients. Some people get it, and other people have to think about it before they understand it.
Yeah, and it's also, excuse me, it's also a interesting conversation to have, particularly in the current climate. Is like, is Bitcoin risky? I mean, is it a risk asset? I mean, of course, people will look at the volatility and say, well, of course it is. Look at the swings and look what it's done over the last 2 or 3 years. But that's one way of looking at it for sure. But you can look at it another way and say, well, its monetary policy is set in stone, and it's been that way for over a decade. Like in environments where there's a lot of unknowns and chaos, and I think we could all make it's not too controversial to say, in the current climate, geopolitical and financial all over the world today, what central banks are doing and with a variety of asset classes, there's a lot of chaos, and that's manifesting in many different ways. That Bitcoin is looking increasingly, it all depends on timeline, of course, right? What your time frame is. But I feel like if we continue to move in this direction with the legacy system and legacy assets and investments, it could easily see a time in the not too distant future where people will value more and more the simple fact that Bitcoin's variables, many of them are known. What the market is going to do with those variables is a little bit unknown in the short term, but man, like in the context of a central bank that can print a ton of money, and what they can do to interest rates, and what's happening in all other asset classes, the certainty of Bitcoin makes me think it's not such a risky asset, or at least may not be seen as such in the future.
Yeah, I agree 100%. And there's a couple things embedded there. So one is, is Lindy, right, in the passage of time, which is, talking to clients and explaining that it's the best performing asset of the last decade, which means that, it's been around for over a decade, by the way, this quote unquote newfangled money. It's not that new.
Right.
And yeah, every day that goes by that the monetary policy remains intact and that the network keeps cranking out, blocks every 10 minutes, plus or minus, adds to that thesis. That's one. And then, yes, definitely, when I am of the belief, which other people have said, that it's riskier not to own than it is to own, right? Like, you would be a little bit crazy, in my opinion, especially if you had a fixed income, government bond skewed portfolio. You'd be a little crazy not to hold this inflation proof asset, because the one thing that can crush your fixed income heavy portfolio or your annuity product is going to be inflation. So definitely you ought to own a little bit of this stuff, and it's riskier to not own it at all than it is to own a little bit of it, in my opinion.
Yeah, no, I'm inclined to agree. What's your take on the current situation? And this could be just how you think about it yourself or how you address it with clients. But Bitcoin was born out of the fires of the great financial crisis, right? And it's only existed in a bull market since that time. And it seems like we're on the precipice of another downturn now. Maybe it's put off by certain measures, but at some point it's going to come, whether it's this year, next year, 5 years from now. I mean, the party's got to end at some point. And even if it's not the big, finale of this legacy system party, there's got to be a recession. There's got to be a downturn. And certainly things like black swan events like the coronavirus don't help. How do you think Bitcoin is going to respond in that sort of scenario? It was built to act as a life raft. Do you think it's such a risk-on asset that people are going to have to liquidate to cover their just get out of such risky assets? Or do you think there's going to be a flight to using it as a safe haven of some kind?
Yeah. So I think there's two pieces there. There's the history so far, and then there's what's the future. One of the things I did in the book was I did a simple exercise, which was up to that point, as you pointed out, there hasn't really been a real bear market, since Bitcoin existed. I mean, technically we had a bear market in U.S. stocks, a year and change ago, but it was just barely, and it only lasted, a quarter. I mean, yes, the S&P was down 20%, but it didn't last very long. So there were 5 cases that I looked at in the book, basically where U.S. stocks, where the S&P was down 10% or more. And in 2 out of 5 of those cases, Bitcoin outperformed, and in 2 out of 5, it underperformed, and in 1, it was about the same. So it was like, sometimes it was better, sometimes it was worse, sometimes it was no different. we're going through a period, literally as we speak, where we're getting tested, right? I mean, I tweeted out on Friday that I was buying stocks, actually that I was buying stonks on Friday, at a point when the S&P was down between 16 and 17%, from the recent peak. And Bitcoin's been down this week too. I mean, I think Bitcoin's down probably in line with stocks, more or less.
Mm-hmm.
So in these very fast liquidations, pretty much everything loses value except for, high, quote unquote, high quality government bonds like treasuries. Treasuries, have made money. So yeah, so we haven't yet seen the safe haven status. I think that the safe haven status will eventually out, but that will be at least an order of magnitude from here in terms of value, and maybe two, right? I mean, that's 2 trillion to 10 or 20 trillion dollar, Bitcoin, right? In terms of the total valuation. I think I'm actually optimistic that we will get there, but I don't know that we're that close. And that's okay because that's the opportunity, right? But the time it's truly a safe haven and negatively correlated, like reliably negatively correlated to stocks and real estate and other risk assets, well, the thing's going to be worth a lot more because that's an amazing asset to hold.
Right. You'll have missed out on a decent amount of the growth, right?
Yeah, exactly.
Yeah. Thoughts on the halving coming up?
Yeah.
What are they?
Oh, in general. So actually in one of the earlier pods, I think it was Brady's Citizen Bitcoin, I talked about how I actually think it is a fundamental event, because if I were, a government or consortium of governments, I were going to attack the network, I probably would do it right after the halving, which tells you that if the halving happens and nothing happens, well, then you're probably good for another 4 years. So I do think it is potentially a fundamental event. Then there's a question of, well, who cares about whether it's a fundamental event, because price, marches to the beat of its own drum. Certainly in the recent halvings, we've seen price go up into the halving, and then usually it corrects a bit afterward, and then it goes to the moon, right? You have a big bull market. So that doesn't mean it'll happen this time. I actually am inclined to think that the pattern will repeat to some degree. So I do expect upside basically from where we are, today at, I don't know, 8,500 or whatever, through the halving. And so I would say more or less I expect the cycle to repeat. But on the other hand, it wouldn't surprise me at all if the cycle doesn't repeat, because history often rhymes, but it does not repeat.
Right. It's funny in the Bitcoin space. And of course, it's easy to understand why, but we all look back and say, well, this is how it performed previously, so we should expect a similar performance, in the future. And, one thing about Bitcoin is maybe long-term, it's somewhat predictable, but you never really know what it's going to do, and it has a mind of its own. And, this is why I think there's this push toward, dollar cost averaging in to take your position rather than trying to time the market, because that rarely works. But speaking of that, are you tempted, or do you have a strategy, or do your clients ask you about, once they become familiar with the kind of boom bust cycle that has characterized Bitcoin thus far in its life cycle, to trade during, the blow off top of a bull market, to take some profits, get back in at a lower price? Do you have a strategy for that, or do any clients expect that from you?
Yeah, it's interesting. I haven't previewed that with them yet. For most of them, the position is small enough that it's not going to be like life-changing, wealth, right? If the thing 10x's, it'll be, a nice addition to the overall portfolio performance, but it's not going to change their lives.
Right.
So yeah, I would say I don't try to be too clever about trading. I think that's mostly a loser's game. And I certainly don't, recommend the average person, try to time this stuff. So I definitely am skewed toward dollar cost averaging. And full disclosure, I have invested in one Bitcoin company, and that is Swan Bitcoin, and they're rolling out a dollar cost averaging product.
Mm-hmm.
So I do believe in that. With respect to taking some money off the table, yeah, there is a basic tenet of portfolio management which says that you should rebalance the portfolio periodically. So if you have a target allocation for any asset, and it was whatever 3%, and then the thing tripled or quintupled, and now you're at 9% or 15%, well, you probably ought to trim it back. And then you have to factor, okay, tax, right? If it's in, if it's in a tax deferred or tax free account, then you're more inclined to trade or to cut it back. But on the other hand, if it's in a taxable account and you got to pay capital gains, then you have to factor in, well, how much income, basically what is the capital gains rate that applies to the client? And that depends on overall income, et cetera, et cetera. So it's a bit of a mealy mouthed answer, but yeah, if the thing, if we go into the six figures in dollar terms in this next cycle, yeah, we're going to, as reasonable portfolio managers and fiduciaries, we're going to have to trim some back. I shouldn't ever say never say never about anything, right? But I'm going to be reluctant to go to zero allocation, right? I'm always going to want a position.
Mm-hmm.
But yeah, if it gets too big, you have to trim it as an investor.
And I'm kind of getting the sense that, if you broach it with a client, a new client, existing client, you don't, when they get in is not a function of price. Is that correct? Like you just, if they're interested in Bitcoin as an investment, you take a position over a period of time. It's not, you're not waiting for something in particular.
Yeah. Yeah. I mean, look, it's at the moment, like, could my perspective on that change? Yeah, it's possible, but I would say at the moment and for the foreseeable future, I'm not going to want to have zero allocation.
Right.
I'm not going to get too tricky or crafty or clever about trying to time, when I get in. I might start with a really small allocation if I don't feel like the timing is great, and average in a bit. But yeah, I wish I were so brilliant that I could, that I could time it perfectly. But let's be honest, with an opportunity that's so asymmetric, right, where the probability weighted upside is so much greater than the current price, the biggest risk is that you just miss the boat, right? You wait around and you wait for your price, and it just takes off, and you miss it.
Yeah.
So that's an unacceptable outcome based on current facts and circumstances and what I know.
Yeah. Andy, you're clearly not following some of the excellent TA people on Twitter. They can tell you exactly when the bottom is in and when to buy. So just a suggestion.
Yeah. No, it's funny. I spend some time. I do actually pay attention to some TA folks a little bit just to kind of observe, and partly for entertainment purposes and partly to see if what they're doing seems to work. And I think the problem with TA for me as a fundamental investor is sometimes it works and it'll work until it doesn't. And especially there can be, fundamental events that really just change the environment. I can imagine a point at which a central bank of a, minor country goes public about owning Bitcoin, right?
Yeah.
Well, your chart's not going to tell you what's going to happen to the price, right? If you're out at that point, you're going to be really sad that you don't have the exposure.
Yeah.
So yeah, it's I do pay a little bit of attention to those guys, but I don't drive trading or investment based on those guys.
Yeah. What's most exciting to you right now about Bitcoin? Like, you just wrote a book, you're on the book tour, you're doing the podcast, you're talking about it. You're balls deep in the rabbit hole, like many of us, I'm sure, and further every day.
Yeah.
What's most exciting to you? And as a, kind of add on to that question, is it difficult to engage in, the traditional aspects of your job, knowing that this new world is being built and all the exciting things that are happening in it?
Yeah, I mean, look, it's definitely the most fun part, right? I'll be honest.
Right.
There's no hiding my interest in it and my excitement about it. So that's that question. And then, yeah, what most excites me about it? What most excites me about it is that it might actually be a solution to this debt problem, right? I mean, clearly we've had this huge intergenerational transfer of wealth, and clearly we're in an environment where, regardless of who gets nominated and then who gets elected, um, the government's going to be printing $1 trillion plus annual deficits. This is in the US, right?
Yeah.
And foreign governments are doing similar things. So it's like, well, it's going to end badly. So it could end really badly. Or if we can find some way of, forcing a change and bringing it to a head sooner, you're actually going to potentially avert a lot of pain. And when I say a lot of pain, I'm talking about the Ray Dalio perspective, which is current facts and circumstances look most like the 1930s, right?
Yeah.
Like these kinds of scenarios with populism on the rise frequently end up in war, whether it's internal, civil war or world war. So yeah, I would like to avert that outcome, and and I see this as the best thing that I've seen, because I don't see any of the other potential solutions to this problem as being likely to pan out.
Yeah. That's a good point, and one that I hear quite often, one that I felt myself, and I've talked about it a bit on the pod, so I won't go into too much detail, but effectively someone who's interested in being informed on the world and seeing with the utmost clarity, they look out and say, holy shit, there's a lot of problems. And then you speak with guys like Ray, or you read their material, or you construct a picture of the world, and you think, this doesn't look good. And then Bitcoin comes along, and for many of us, it is, as you just articulated, it's that thing that might, quote unquote, save us, to be a little dramatic, but it
Yeah.
might be that thing that allows us to avert disaster. When prior to learning about Bitcoin and really seeing it for what it is, and then subsequent to doing so, did your perspective, worldview, attitude, hopefulness change in any meaningful way?
Yeah, it's a great question, and I'm uncertain about what I was thinking about specifically in that respect a few years ago. I was definitely a bit depressed about the fact that interest rates were so low, and that the implication was returns were going to be so low, right? So I've spent my career, in the investment business, and I actually put out a letter to clients in mid 2016, which was a year before I discovered Bitcoin. And the message was, look, with interest, by the way, we as a firm had a really strong track record of performance, in the 25 years up to that point. Or more than 25 years, I don't know, 27 years up to that point. And the message was, look, you're not going to get that performance going forward, right? Like, that was great, but lower expectations significantly. And that wasn't a great message. And it was interesting at the time, we were for sure in the minority in delivering that message, right? The message coming out of other wealth managers was, all is well, sure, we're going to keep making you, tons of money. You're going to make double-digit returns owning stocks over long periods of time.
Of course, it's always a good time to
works.
invest, right?
Yeah, that's right. It's exactly. It's always a good time. Yeah. It's always a good time to buy my product. And I took the opposite view, and my father agreed with me, and we decided, no, we're going to lower expectations. We're going to tell it like it is, or how we see it. So that was a downer. I will say that I actually hadn't really realized and internalized the magnitude of the debt problem really prior to finding Bitcoin. I mean, finding Bitcoin was a forcing function for understanding money, and also really understanding the depth of the debt problem. I knew that it was a problem, but I actually hadn't fully internalized the magnitude of it until I found Bitcoin. So I don't know. Maybe there's a countervailing factor. I mean, there was increase in the oh shit perspective.
Right.
But on the other hand, I saw that this could be a solution, so that was positive.
Yeah, well, that's probably the best way for it to happen, right? You got the simultaneous oh shit, but right after you have but wait a second,
Yeah,
maybe
that's right.
we can do something about this.
That's
Where
right.
I think a lot of people were like oh shit for several years, and then
Yeah.
they had to suffer through that until they got in touch with Bitcoin. Um, what's I don't mean to disparage either myself or any of the other pods you've been on or the people you've spoken to, but clearly the world that you're now in does not look anything like the legacy system, right? So the legacy system is the Journal, the Economist, your mainstream financial media sources and stuff like this. And now you're a published author in a world in which the people that you're interacting with to have these conversations, to promote your book, to discuss the merits of your investment thesis are like, for lack of a better term, I don't mean to be mean, but like weirdos in a way, as far as the mainstream is concerned,
Sure.
So what's that been like for you? And like, have any of your friends raised eyebrows? Like, you know what I'm trying to say? Like, it's you're in the weird, wacky, wonderful world of Bitcoin now, and it's very different from the world that you've come from.
Yeah, it's true. In one respect, I don't know, man. Maybe I just got used to it, right? Like, I'm a weirdo too. I mean, I am clearly a big advocate. I am clearly a Bitcoiner. Like, I'm way deep down the rabbit hole, and I just keep falling deeper every day.
Right.
So maybe it's just normalized for me. Like,
you've just found your home, and now you can express yourself.
Yeah, maybe it doesn't seem strange. The other thing too is, like, honestly, the quality. I mean, yes, there's new pods coming up every day, but like, you and all your colleagues in the podcast business, let's say, such as it is, keep getting better, right? So, like, I'm sure you're continuously improving and honing your craft and getting better every day. So there's actually probably some convergence there. And then maybe the last piece of it is the public perspective, or the way people perceive the mainstream media has just rightfully gotten worse and worse, right? So when you think about reputation, and then of course you look at how those things like the Wall Street Journal, like the Economist, like the New York Times, cover Bitcoin, and you're like, guys, this is just embarrassing. Like,
right?
Can you at least just get your basic facts right?
They discredit themselves all
exactly.
over the place. Yeah,
they discredit themselves all over the place. And I think actually public opinion now has probably shifted to the point of you can't reasonably get a balanced view from any single publication, right? So, like,
politicized all over.
Yeah, I read the Wall Street Journal, I read the New York Times, I read the Economist. Those are like my arguably three main, quote unquote, regular way news sources. And they're all wrong in their own ways, and they're all biased and skewed. And even if I read all three and think about the juxtaposition of those opinions, I still don't necessarily, get the full story. So yeah, gone are the days when you could depend on one or two news sources for the quote unquote truth or most of the truth. And some would argue that, it was never that way, but I think that public opinion is coming around to that view by now in a way that it hasn't until relatively recently.
Yeah,
that's my opinion.
Yeah, no, I agree totally. And like, I'll sometimes throw on CNN, Fox. I don't watch a lot of TV at all, but sometimes if I just want to, it's a double-edged sword, right? Because I'll turn on Fox or CNN because I just want a good laugh. I want to see how ridiculous things have gotten, but then I get sad right after because I'm like, oh my God, like this still forms the basis of a lot of people's perspective, and that's upsetting. But
I'll say, by the way, from personal experience that I have completely cut out TV as it relates to information and news.
For sure.
I mean, it's I'm at zero allocation on that source.
Yeah.
And that wasn't always true, but it's actually not entirely true, right? Like, if there's a clip, like if Bitcoin is covered by CNBC, or it's covered on video on Bloomberg, I'll watch it. but yeah,
Sure,
I've
but that's just
basically
because
gone
you're
to
on the
zero
sidelines rooting like, yes, go, go, go.
It's true.
But you know what, man? Like one of the, I'm obviously, incredibly enthusiastic and optimistic about this whole thing, but it's such and I've talked about this a little bit before, but it's such a paradigm shift that obviously you're going to question yourself at intervals throughout this journey. You'll read, you'll educate yourself, you'll take a position, like a intellectual position, and then you'll think, like, is it like, am I crazy? It's like, is it really what I'm seeing it as? Like, is it really what I think it is? And one of the things that kind of keeps my compass pointed in the right direction, or at least what I feel is the right direction, is despite how they may appear, a lot of people in this space, whether we're talking about podcasters, people that write articles, people that, give talks on, YouTube, the whole gamut. I'm like, one of the things that makes me kind of, and, there's an echo chamber argument to be made here, but leaving that aside for a moment, the people that I see and have the opportunity to interact with, I just see people that are, doing their best to think as clearly as possible, on as informed a basis as possible, articulate themselves as clearly as possible, be humble enough to learn as much as possible. And like, it's a phenomenon. Like, I stand back and I think, like, wow, like, look at this global grouping of people that are obviously connecting mostly online and at intervals at conferences and stuff. And like, I've never encountered a group of people that I feel are so authentic and genuine and willing to learn and willing to question their own assumptions and all of that. So that's one of the things that, like, if I ever get questioning myself and think I'm going insane, I look at these people around me and think, no, there's got to be something here, because there's a lot of really, really great people interacting in a really unique way.
Yeah, I agree. When the way I frame it in the book is, I still do say that the thing could fail and go to zero.
Sure.
Not least because of the unknown unknowns, right? And as an investor, you always have to say, what's the thing I didn't think of that could kill it? Yeah. And there's always something by definition that you didn't think of that could happen. So there's that. And of course, I think I agree 100% with what you said. Part of it is not only the well-intentioned people, but also, just the caliber basically of intellect that's come into this thing, right? Like, people who are much smarter than me. And there's a lot of them, and there's more every day. Yeah. So that's just really impressive. Literally the IQ points coming into this space, as well as just the range of backgrounds. I mean, you look and you say, like, yes, you got your cypherpunks and your hardcore libertarians and your anarchists and et cetera, but you've also got just a wide range of folks and people with different backgrounds from different parts of the country and different countries all across the world. So yeah, it tells you that there's something going on there. And I think that the fact that it is a thing that is completely outside, or at least came completely outside from the regular way financial system, always will give you pause, and you really have to say, wow, like, could this really possibly be? So yeah, do I sometimes wake up and ask myself, am I crazy? Yeah, I guess so. Although it's becoming less and less frequent. I got to tell you, my HODL grip has strengthened with time.
Well, I know what you mean. I mean, sometimes I wake up and think I'm not crazy enough. Like, I'm not devoting enough time. I'm not devoting enough resources.
That's right. Talk to Bitcoin Tina.
Oh yeah. Well, yeah. I'd love to talk to him
Bull
someday. Yeah, I know. I listened to. He just did a series on, I think, was it the Bitcoin Magazine podcast?
Yeah. It was great.
Yeah. Andy, do you have a bit of time to run through these rapid fires, or?
Yeah, of course. Let's do it.
So, do you know the drill? So I'll ask you a series of questions, and you can answer them however long or short as you want. And then we'll just do some word associations at the end, where I'll say a word. You tell me the first thing that pops in your mind.
Cool.
First one. What is money?
What is money? Okay. Money is a medium of exchange across space-time. And by virtue of that, it is also a store of value and a unit of account. But those Econ 101 textbook definitions don't tell you the underlying characteristics. The underlying characteristics of money, I believe there are 14, which I cover in the book. Identifiable, transferable, durable, divisible, dense, fungible, scarce, short-term stable value, long-term stable value, private, unseizable, censorship resistant, required for some purpose, and backed by some power. It's important to note that no form of money scores well on all those characteristics. And by the way, none of those characteristics is binary, right? It's like a continuum or a sliding scale. So each form of money is just a unique collection of those characteristics, in my view. And then maybe the last thing I'll say about it is, I think the Austrians had it right. I think Karl Menger had it right, that there's basically three types of goods in the economy. There's consumption goods, there's capital goods, and there's money. And yet, none of those is discrete. So every good in the economy is partly one of those three. And as a result, the best money is the money that is only useful as money and nothing else. And if we're right, Bitcoin could be the purest and best form of money someday.
Right. There's two things I want to say about that. One is that, I mean, you're effectively redefining money, because money was defined in a much more limited scope previously, and you've just, articulated 14 different, for example, unseizable. That was never a foundational attribute of money, right? Now, in providing your list, you're effectively saying you think it's a quality that a good money should have, and I totally agree with you. But so are you kind of in constructing that list, redefining what you think, good money is, or what attributes money should be judged on?
Yeah, I mean, I think that's a great question. I mean, part of my frustration actually with the journey of learning about Bitcoin and learning what is money was that there were these sort of incomplete pictures of actually what the underlying characteristics were. Some people would say there's 5 or 6 or 7. And I think that one can make a reasonable case that some of those characteristics are more crucial than others. I think that's a fair statement.
Sure.
In the book, I score the dollar and I score gold and I score Bitcoin along those characteristics, and I equal weight them, which is probably wrong. But on the other hand, I think reasonable people can agree that I might value certain characteristics more than you value them, and somebody else might value different characteristics more, or I might value certain characteristics some of the time and not, at other times. I think the unseizability, is that the one you just called out? The unseizability?
Yep.
That one usually doesn't matter, except when it really matters. Like if you're, fleeing, for your life out of some unstable political situation. So yeah, I don't claim to know the ground truth on fundamentally which ones are absolutely more important and by what amount. But I will take to task or argue against anyone who argues that, any of those 14 is totally irrelevant and unimportant.
Yeah. And for the example that you just mentioned, where you said, unseizability doesn't matter until it really matters, totally agree. But I think that particular rabbit hole goes even deeper, in that if you have a form of money, a way to store value and transmit value, medium of exchange, et cetera, that is no longer confiscatable, that's unseizable, that's a fundamental attribute of how society's approach to money that will probably have extremely profound effects on how societies are structured. And I won't get into it too far because I've gone into it a little bit in another pod, but a lot of if you trace back through the development of human civilization, a lot of structures in society were developed to protect value in its various forms: money and land and cattle and grain and all the rest of it. To have an asset, a form of money that people say, well, it's still confiscatable. It is still confiscatable. You could be tortured or whatever, but it's the first form of money that requires your participation in its confiscation. So for example, like someone could just kill you and steal your gold or steal your cash or take your safe or take your jewelry. It's the first form that they need you to participate. So if you just decide, I'm going down with the ship, I'm not giving up, then it's unconfiscatable. And again, that's a rabbit hole in itself. And I think it's a super profound shift. And again, one of the reasons why Bitcoin is so compelling, and the implications that would have in the layers of society that are constructed on top of money, which is, many.
Yeah, no, I fully agree with you. And I like your framing of it's participatory. It does require participation to give up the asset. And of course, the crucial book here is The Sovereign Individual. And I hadn't encountered that book until I encountered Bitcoin, and I've since read it 2.5 times. So yeah, it's there's no doubt that society will be reshaped in very interesting ways if and when Bitcoin becomes significantly more dominant. You're spot on.
Yeah. And if you've got time, I want to take a slight detour, because this is the one thing that I had in my mind that I actually wanted to make sure I talked to you about, because
Sure.
you mentioned it in the book. It's something that I don't think a lot of people maybe outside of this community are very familiar with, but it's the moneyness that is the term you used about it. And basically, as the argument goes, many different things that we interact with in our world will have a certain portion of them. So whether it's your car, your house, paintings, bottles of wine, whatever, some of the premium will be a monetary premium, not
Yep.
their usefulness or whatever. And that's a pretty instructive way of understanding what's happened to money, fiat money today, and how the destruction of fiat money has increased moneyness in a variety of other goods. You could think of it in terms of the value from the money seeping out into the broader world, and what are the implications of our world being imbued with what are the implications of more things in our world being imbued with more value as a function of the degradation of the money. So could you just elaborate on that a little bit?
Yeah. Wow. Okay. There's a lot there. And definitely this is covered in the book. So yeah, totally agree. And one of the things I mentioned earlier, because you were asking, about what is money, and I talked about Menger's, concept of consumption good, capital good, and monetary good, and how the borders blur. So yeah, so most things that we think about are part money. They may also be part consumption good and part capital good. I mean, you think about, well, a car, right? For example, car can be part consumption good. You drive to the beach and you enjoy leisure, or it can be capital good, right? You drive to work and it allows you to be productive. Many things, of course, in history that have been used as money are also consumption goods. And the classic items are, cigarettes, in prison or out, soap, cell phone minutes. These things are part consumption good, part monetary good. In the investment world, where I come from, there's the monetary element versus the capital good, and we just call that liquidity, right? The example I use in the book is, maybe I buy an apartment complex and I pay, 16 times cash flow for that. But I can't get out of that asset, easily, right? I have to run a sale process and I have to go through all the steps that are required with buying and selling a property. On the other hand, I could own the property or a group of properties in the form of a real estate investment trust that trades every day, or let's say 5 days a week on an exchange. So maybe I'm willing to pay 20 times cash flow for that asset rather than 16 times cash flow, because it's quote unquote liquid. And another way of saying that is the the moneyness, quote unquote, there is embedded in that liquidity. So yeah, there's a moneyness to all assets. There's a consumption good element to most or all assets, and there can be a capital good element, and all those lines are blurred. Now, as you pointed out, you've got the concept of sort of moneyness or store of value really embedded in a lot of assets, and there is no question that many people the world over buy assets, not because they want to just earn a rate of return, but really because they want to avoid inflation and that loss of value that you highlighted. And that's where you talk about the monetary premium or the store of value premium that's embedded in things like real estate, arguably gold. I mean, you can say gold is money, or you can say it's sort of related to money and it's more of a store of value, but it has that premium. People pour value into these assets just to avoid inflation. And in a world where Bitcoin takes a significant portion of that, and that's one of my five legs of where does the value seep into Bitcoin from. There's no doubt that that some of it is monetary premium that will come out of other assets, the biggest of which is real estate. And those are, nobody really knows what the monetary premium embedded in some of these assets is. But these assets are, there's no question that in the $200+ billion of real estate globally and the, $75+ billion of equity value, et cetera, there's definitely, excuse me, what was I saying? Billion? I meant to say trillion. Yeah. 200 trillion of real estate, 200 trillion of stocks. There's definitely some monetary premium embedded in those, and it's got to be, trillions of value.
Yeah. And I think also it's interesting to explore, if for no other reason than just, sitting at home, running your own thought experiments or thinking more deeply about some of these things. But excuse me, the effect on society in culture and behavior when the value that's supposed to be contained in the money seeps out into a variety of other things in the world. So I just feel like if most of the value was contained in the money, we would probably have a more like kind of austere sort of world where people weren't placing so much value on the chains and the designer clothing and the cars and the houses and the artwork and the this and the that, and I think that's just, of course, some of that will still exist. Yeah. But if all of those items were seen as being less valuable, then presumably they'd be less sought after. They'd be less used as status symbols, et cetera, et cetera. So I'm interested in kind of running those thought experiments of imagining a world where most of the value is actually contained in the money and what that means for social, behavior.
Yeah, no, 100%. And I agree with you. And I think most Bitcoiners are on the same page, which is, yes, consumer culture would be curtailed. People would probably, have lower time preference. They would take a longer view. Right. Part of that is because interest rates would, the equilibrium interest rate, let's say, would just be forced higher than what it is today. So there actually would be an embedded, I don't want to say risk-free, but let's say, just time value return on accumulated money and accumulated capital.
And more incentive to save.
Yeah, exactly. Yeah. That's a shorter, more clear way of putting it. Exactly. There'd be a real incentive to save. And then there's, it would be disruptive to entire industries. It would be disruptive to my industry, right? I mean, why should everyone who has significant assets, basically be forced into hiring some third-party manager to do their asset allocation and give them financial advice, when instead they could, if they want, just store their value and maintain their purchasing power, in this single asset. So yeah, I agree with you.
Yeah, and as just to finish off that point, as is highlighted so often today, I mean, one of the reasons why we have this diverging wealth gap where the rich are getting richer and the poor are getting poorer is because, the rich are able to sequester their value in these assets that keep pace with the degradation of the value of money or inflation or whatever. And people that are earning money paycheck to paycheck are unable to do that. So simply as a function of one's able to preserve purchasing power, one is not, then you're going to get a divergence of wealth,
Yep, 100%. I've got a short section in the book, and I've actually considered sort of expanding it. It occurred to me to even write, a whole book. I would call it The Ethics of Bitcoin, right?
Do it.
But yeah, it has to do, specific. I'm not going to do it, by the way. I don't have time. but somebody should. But yeah, I've got a section which talks about exactly that. I mean, it talks about, the Cantillon effects, right? Which is first the money goes to the bankers and the CEOs and the corporations, and eventually it trickles down to the wage earners, but they're sort of last in line. It's what you said, which is the people who actually have assets can afford to not hold cash. Because the first dollars that I shouldn't say the first dollars, but the first, money that we have to hold, or the first asset that we have to hold, is cash money, because everyone has to transact. So, if I can only accumulate $1,000, period, well, I'm going to hold that $1,000 in cash because I need it to run my household. It's only after you escape that sort of bare minimum of capital, working capital, right? It's what we call working capital in the investment business. Only then can you accumulate more capital, get it out of that, crappy inflating asset, and put it into something that's gonna work for you. And yeah, of course, the people that have the capital are the ones who can afford to do that. So There you go.
And in a money that isn't degraded the way that the current fiat system is, stands to reason that problem would be minimized, right, to some degree.
Yeah, absolutely. It would at least level the playing field with respect to the lower half or the lower quartile, or wherever you want to draw the line in terms of income of the population. And at least because that portion of the population that's only got a minimal amount of money socked away, literally 100% of their net worth, is bleeding away in time with inflation.
Yeah. All right, big detour there. Let's get back on track.
Back to the rapid. We're going to be more rapid in this rapid fire section.
Yeah,
we got one question in.
Yeah, there's only 20 more. If you had to explain Bitcoin to a 10-year-old, what would you say?
Yeah, I think I would just say it's internet-based money.
How will you know?
That's the short answer.
Right. How will you know if Bitcoin has failed?
Yeah, if nobody's talking about it, right? If no one cares, basically. And by the way, I'll put a footnote on that, which is, you could argue that if it's a wild success, that'll also be the outcome, right? It'll just be some base layer protocol that nobody really talks about, and it'll be several layers of abstraction down.
Right. Nobody talks about TCP/IP, for example, right?
Right. Exactly.
Most normal people.
Exactly.
Yeah.
Basically, if nobody cares about it, or nobody's using it, then I would say that's failure mode for me.
How will you know if it's a success? What does Bitcoin succeeding look like to you?
Yeah, I think Bitcoin succeeding, at least in terms of the symptom, is unit of account status, right? It's where people are measuring value and reporting value and transacting in terms of sats. That's
Can you
it,
imagine?
man.
Can you imagine going to the deli?
I can imagine it, man. I can imagine it. It's going to take some time, but it's definitely imaginable. Yeah. Makes me happy. Fills my heart with warmth.
Me too, man. I mean, people listening can't see the gigantic smile on my face, but yeah, me too. You've got one resource to hand to someone, not your own book, who you want to bring into the, who you want to help on their Bitcoin journey. What is it? To help inform them.
Yeah, like one piece of reading material or something, right?
Yeah, book, article, podcast, episode.
Yeah.
Website.
That's a tough one, and I can't choose my own.
Well, it goes without saying.
Yeah, I guess that
yours is one of them.
Yeah, I guess maybe you have to say Bitcoin Standard, because that's the complete, that's pretty much the complete story. So I probably still have to go with Saifedean. It might be a different answer if it's like, well, it could be a different answer if that's like the only resource, or if that's just the first resource.
Yeah, first. Let's go with that.
First, yeah. Maybe it's Jan's book. Maybe it's Inventing Bitcoin.
Yeah, it's a great book.
Yeah, because that is very digestible, and it's cut pretty lean. Gigi's 21 lessons. That's even more dense. And digestible. I don't know, man. There's so much great stuff. I mean, there's 4 or 5 other books that, you know, I really like.
Yeah.
I'm not sure I'll go into all of them, but
It's crazy. And even during the last bull run, there wasn't, I mean, a great deal of resources out there. Obviously, Andreas's stuff, and I think he had
yeah.
1/2 books published at the time, maybe the second edition of Internet of Money. Not much on the go. And I mean, whenever the next bull run happens, assuming that it does, I mean, man, you're going to be spoiled for choice if you're a noob coming into the space.
Yeah. I mean, you got Knut's book, you got Callie Rosenbaum's book. That one is, you know, much more technical. I mean, I really loved Understanding Bitcoin by Pedro Franco, which I think came out in 2015. It's, you know, it's been out for a while. I mean, there's a little Bitcoin book. There's so much stuff, man.
Yeah.
So much good stuff.
What other investment are you most interested in right now in the landscape of investments?
Yeah. It's actually gold. It's actually gold, man. Hard money is going to be probably really important in the next decade.
And are you interested in gold simply because, even though, correct me if I'm wrong, you probably think Bitcoin is a harder and better money than gold, but the just simple fact that gold is more lindy, more people are familiar with it, that people will flock to that as a flight to safety rather than Bitcoin in the short to medium term?
Yes. And it's time frame. I mean, I can make a case for Bitcoin and gold doing well in the very long term. I'm talking about multiple decades. I can also make a strong case for Bitcoin, or for gold doing very well and Bitcoin doing very well, you know, in the next cycle. I do believe that Bitcoin will take share from gold. In fact, I wrote that in the book, right? That's part of the investment thesis.
Mm-hmm.
And so the question is, does gold eventually become viewed as, you know, truly obsolete? And I think that's definitely possible. I think it'll take a long time to get that outcome. But, you know, there still likely will be demand for that physical good that doesn't require internet access. Gold and Bitcoin are very similar and they're competitors, and yet they do have some discrete characteristics that are different that could be valuable, you know, to someone. They could both be valuable to someone even in the very long term.
For sure. What's one piece of advice you'd give to someone just entering the space? A noob friend, what would you tell them?
Yeah. I would say buy a tiny amount, right? Get that little piece of skin in the game. Make sure you don't buy more than you're comfortable literally losing tomorrow. And as you learn about it, you know, then size up your exposure, you know, as you get comfortable, basically. But yeah, just start with that little bit, because man, there's nothing like a little bit of skin in the game to focus the mind.
Totally. What movie or song is most related to Bitcoin in your opinion?
Oh yeah, man. That's an easy one. The Matrix, obviously.
Right.
And then this one, actually, I was thinking about this earlier today. I wouldn't pick a song, but if I was going to pick a band, it might be Rage Against the Machine.
I've gotten that several times. Can Bitcoin be stopped? If so, what is Bitcoin's biggest vulnerability? If not, why not?
Yeah, man, you know, I've got the laundry list of risks in the book, but the biggest risk, so can it be stopped? Yeah. I mean, look, as an investor, I never assign a probability of 0 to something, right? You can have minuscule probabilities and you can be 99.9% sure of something happening, but you can't ever really be 100%. So could Bitcoin fail? Yes, Bitcoin can fail. Okay. What's that failure mode? I guess it's probably, you know, long-term concerted government attack, you know, coupled with some general public perception that Bitcoin's going to, you know, destroy the world or the political system or the financial system if it succeeds. It's something like that. It's a combination of government focus and also public focus that are, you know, just extremely negative and concentrated and focused over time.
Yeah, I think
which is extremely unlikely in my opinion. But, you know, it's
Yeah, I
possible.
mean, I think the public perception attack vector is not that unlikely. I mean, obviously FUD is just a common thing that's been around for a long time, but the more these problems become exacerbated, whether they're environmental or whether they're inequality or whatever, I can see a large scale public narrative forming against Bitcoin, and that could be problematic. And I don't think it would kill it or stop it, but it could delay things dramatically.
Yeah, I agree, and that's part of the reason I wrote the book was I do strongly believe that education is really important. I think what
Sure.
you're doing, educating people, I think what people who write, whether it's articles or books, people write and talk about it and get people to understand the benefit. I think that's really important.
God's work. What is something about Bitcoin you don't understand very well or need to spend more time on?
Yeah, I mean, I would, if I were financially independent, right? If Bitcoin had already made me rich, if I'd already made my FU money,
Right.
I might go deep into cryptography. That would be high on my list is to really understand the stuff, including the ongoing research into quantum resistant crypto.
Mm-hmm.
But even just understanding, in depth ECDSA and SHA-256 and also the history of prior cryptographic tools. I would love to do that.
Yeah.
In my copious spare time.
Sure. When, if ever, do you think the first central bank will start adding Bitcoin to the reserves? And do you think central banks will exist in 20 years?
Yeah. So I'm going to say yes, they're going to exist in 20 years, although it depends on what your definition of a central bank is. If Bitcoin succeeds, then the powers of central banks at that point will be significantly reduced, significantly curtailed. When will a central bank buy Bitcoin?
Yeah.
Yeah. I think that it's possible that one already has. I think a more interesting question is how much time will elapse between them buying and them announcing it. But yeah, I think it could happen, and then it's possible that significant, sizable central banks start doing it in the next few years. What's going on right now, as you probably know, is central banks are scrambling to buy gold, right? Especially Russia and China have been big net buyers of gold.
Yeah.
So if they're big net buyers of gold, why not Bitcoin? And the answer is, well, securing Bitcoin is harder. On the other hand, this is when people dispense the FUD about, losing private keys and security and, how on earth could an institution, basically keep this stuff under control and not be subject to either hacking or inside jobs, right? Inside theft. And my answer to that is, well, governments have actually been managing secrets, for decades, and they do it with sort of mixed success. But this is the way it's going. So it's just a civilizational fundamental skill. It's just a thing that will have to get figured out, right? And resources will be dedicated to it. And we already know something about managing secrets, and the public custodians now, of which there are several, have figured it out, and they'll get better at it. So yeah, I think that once a few more years have gone by without a major theft of a well-known public custodian, and we know who those all are, then at that point, hopefully, institutions, including central banks, could get comfortable dipping their toe. We'll see.
What have you learned about yourself, or how have you changed, if at all, as a result of learning about and interacting with Bitcoin?
Yeah. I can't say that it's, dramatically changed my personality or my life experience. I'm not like one of these guys who was out partying all the time, and now I have a much different time preference, right? Like now I'm taking the long-term view. I was already a family man and hopefully taking somewhat a long-term view.
Right.
I was already a tightwad, my wife will tell you. So maybe I'm even more so. Like maybe I'm even more reluctant to spend, and at the margin, maybe I do want to stack a few more sats in a way that I didn't before. But I think that's I guess that's what I'd say.
Most contrarian or controversial view or opinion, if none on Bitcoin, any subject is okay.
Yeah. So I will stick to Bitcoin, and this is, I'm not sure it's a contrarian view within Bitcoin, but it's definitely a contrarian view in society. And this is the environmental FUD. And I actually discussed this at some length on the last pod I did on the Once Bitten podcast. And that is, I think it's actually more likely than not that Bitcoin will be a net environmental positive, in the long term, right?
Sure.
I think 10 years from now, there really is a pretty significant probability that the historians will say that, yeah, man, the unlocking of distant, otherwise unusable renewable energy sources was accelerated by Bitcoin, and that brought the capital cost of this technology down and the efficiency up, and that caused people in emerging markets especially to install wind farms and solar arrays and hydropower rather than coal plants a few years ago. And man, we're sure glad that they installed that renewable capacity rather than the dirty stuff.
Yeah. It's so crazy how many things Bitcoin has at least the potential to fix. It
is, man. Bitcoin fixes this.
I know, but it's just like, not only is it, yeah, I'll leave that one, but it always blows my mind how many things it has the potential to positively impact.
Me too. One of the reasons I felt so deep down the rabbit hole is it's so pervasive and it just touches everything. And man, it's so fascinating. Like how could you not be fascinated by this thing?
Yeah, no, totally agree. Ballpark estimate of Bitcoin's price in 5 years.
Yeah. So the upside case in the book is 400K on 10 years. So if you're saying 5 years, I'll definitely go 6 figures. Maybe I say, I don't know, maybe I say 150K.
So would that mean that you're kind of maybe not an adherent to the revered stock to flow model?
I think the stock to flow model is really interesting. And it's sort of my base case or my greater than 50% case that it's right, at least for another cycle or two. There's one thing we know for sure, which is eventually it will be wrong, right? Mm-hmm. It won't, you won't
reach infinity.
Exactly. It won't reach infinity. So exactly. So the question is, how many cycles does it hold? And we don't know, but it's pretty interesting. It's logical. And I can see why people take it seriously. And I take it seriously with a large grain of salt. And, I don't have high confidence in it, but it's definitely one of the constellation of factors that I consider.
What will be your response if we're just wrong about all this?
Yeah. So I am honestly, I feel that I will be okay if the whole thing fails. And the reason is because it's so asymmetric, I would be more unhappy with myself for not having investigated it, for not having done my part, to add to the conversation. Because the facts and circumstances just, make it so interesting and exciting. That doesn't mean it couldn't fail. It could fail. So I don't think I will be psychologically devastated. I'll definitely be down, man. I mean, let's be honest. It'll be depressing. It'll be depressing, but yeah, I think that it's one of those things where it's like anything else in life where you say, should I have done the entrepreneurial thing, or, should I have pursued, I don't know, something, a relationship, or, gone somewhere, and you do the regret management thing. You look back and you say, well, how will I feel if I didn't try it versus how will I feel if I tried it and failed? And for sure, man, I would have regretted not trying I would have regretted not trying.
Totally. And I think whenever those circumstances do arise where you look back and if there's regret, like you've got to be able to look at yourself honestly and say, did I pursue it for the right reasons? You may have pursued it for the right reasons and it doesn't turn out. And then there's a level of peace around that. But if so getting into it for the right reasons is important, I think.
Yeah.
This second last question comes from someone on Twitter that hit me up yesterday, I think. And they said, they suggested the question. I thought it was awesome. So would you sell all your Bitcoin to see it succeed?
Oh man.
That's what I said.
That's a great one. Yeah. I guess would I sell all my Bitcoin to see it succeed? I guess the question, what's not clear about the question is like, what's the inverse? In other words, if you're asking me, would I do it to guarantee success? The answer is probably no, because I'm fairly confident that it will succeed. So it's like, I'm not buying that much more incremental insurance versus what I think the circumstances are, right? However, if you said, well, if you hold it, guarantee failure, then yeah, of course I would give up the sweet Bitcoin, because from a selfish point of view, it wouldn't help me anyway, and B, like, how could I possibly inflict failure and crush all the dreams of all the people working on this thing who are great people. So I think that's my answer.
Yeah. I mean, I think that was a very diplomatic or clever answer. I think the question was trying to get at like a sense of altruism, maybe, if you had to release all your coin to see it succeed in some sort of magical scenario. But
I guess maybe I like to think I would, but if I'm I like to think that I would, but I know I'm greedy too. So who knows?
Right. Any question you'd like to see added to this list?
Question I'd like to see added to this list. Yeah, I mean, I always want to know, like, what's the best pitch or the best hook or the thing that people are finding success with when they're trying to explain Bitcoin or get people interested in Bitcoin. Mm-hmm. So yeah, I'm always interested in that. Like, what are you pitching at people? What's working?
I think Old Faithful, orange coin good, number go up is like hijacking greed, man. This doesn't get any easier than that. Okay, last part, word association. I'll say a word. You tell me the first thing that comes to your mind.
Right.
Democracy.
Good.
The Lightning Network.
Young.
Government.
Problematic.
Human rights.
Important.
Violence.
Negative.
Trump.
Negative.
Ego.
Unavoidable.
Wealth.
Important.
Privacy.
Crucial.
Hate speech.
Unfortunate.
Gold.
Money.
Guns.
Violence.
Revolution.
Coming.
Socialism.
Bad.
Family.
Most important.
Inequality.
Unfortunate.
Hell.
Heaven.
Liberty.
Also crucial.
Energy.
Fundamental to life.
And Bitcoin.
Money.
That's it, Andy. I've taken up a bunch of your time tonight. I didn't intend to go so long, but I appreciate you being patient with me. Is there anywhere, any places, destinations you wanted to shout out or direct people to?
Yeah. Okay. So, of course, the book is called Why Buy Bitcoin. The subtitle is Investing Today and the Money of Tomorrow. It's available on Amazon. It's also available on Apple. Follow me on Twitter. I was just a lurker doing nothing on Twitter until a couple months ago. My handle's Edstrom Andrew. That's my last name and my first name, Edstrom Andrew. And I do have a personal website. It's andyedstrom.com. It's not updated. That's on my to-do list, but I'll do that eventually.
What kind of stuff is on
what's
there?
That? It's basically just the book. And then, my firm is called WESCAP Group, and we have a website. It's www.wescap, WESCAP group.com.
Do you see any books in the foreseeable future?
What,
Any,
like writing more?
Yeah.
Oh man, I don't, I'm having too much fun, promoting this one, honestly. And the promotion is important. I mean, these things don't expose themselves. You got to get people to read them and then tell other people. So I think my time is actually better spent trying to get the word out on what I already wrote. Might I write something, more someday? Yeah, maybe. I think it was, I'm really glad I did it. And I encourage people to do it. I mean, it's definitely within reach. Self-publishing, yes, there's some steps you gotta jump through, but it is doable in a way that it really wasn't, before the internet. And if you feel compelled to get your story out there and your view on the world, I encourage people to go for it.
Yeah. Well, man, for what it's worth, like I said at the beginning of the show, I love the book. I think it's a tremendous asset in the space, and it's a great tool for people like myself, and I'm sure many others, to hand to family members and friends and people that, they want to bring into this, this space that they are so passionate about, but haven't really found the right avenue yet. I think it's a really concise, well-written book to draw some newbies in. So I wish you the best of luck in your promotional efforts. I'm sure we'll be hearing lots of you over the next few months on the podcast circuit and that kind of stuff. And I look forward to continuing this conversation over a couple beers sometime.
Likewise, John, the pleasure's mine. Hope to meet face-to-face soon. I'm so grateful for what you and the other podcasters do, and I'm so grateful for everyone that's already checked out the book. So thank you all, and it's been a blast, man.
Awesome, man. Well, you take care of yourself. Talk to you in the future.
All right. Have a good one.
See you, brother.